One of the most interesting parts of the entire technology industry is how much it relies on interest rates. What do I mean? Well, most people would think that the mainstream narrative, the consensus view of the world, is that when interest rates go down, then risk assets go up in price. You can think of tech stocks and things like Bitcoin or cryptocurrencies as risk assets. So of course, when there's cheap capital because interest rates have gone down, those assets go up in price. People put risk on. But if all of a sudden central banks around the world started to raise interest rates, the prevailing logic would be that risk assets would sell off. That if interest rates go up, tech stocks, Bitcoin, cryptocurrencies, etc., will sell down. Now, we've seen this play out before, as we have here. Keith Raboy the other day pointed out perfectly, saying it's amazing. Many journalists and people in tech don't appear to know that the proximate cause of the internet bubble collapsing was Greenspan and the Fed raising interest rates. Now, of course, that has happened in the past. History does not necessarily repeat, but it does rhyme. And so he went on to say that his prediction is that the tech market will collapse no later than the second interest rate hike by the Fed. And so again, this is looking forward. We don't yet know what exactly is going to happen, but I think that most people would generally agree that when interest rates are increased, risk assets go down. Now, what is fascinating though, is that we have Caleb Franzen, who has come forward and said, look, the correlation between Bitcoin and the 10-year treasuries since mid-2020 is uncanny. There's a perfect overlap, and these quantitative relationships aren't being discussed. For the bull run to continue, will rates need to rise further? Now, to be clear, somebody like a Keith Raboy has specifically talked about tech stocks selling off. And he's clearly caught out because I don't know what's going to happen with Bitcoin. That is a big question. In some ways, it may serve as a hedge. And what we see here is that Bitcoin's price is actually moving in lockstep with treasury yields. Now, if we continue and we look, what he goes and he talks about is that the correlation is extremely unique and not what we would expect to see in risk assets. We typically expect to see an inverse correlation between risk assets and yields. For example, if we look at ARK or the inverse TNX on a year-to-date basis, they get a perfect correlation. This is normal. Risk assets moving inversely to yields. If we go ahead and we look at the actual tech stocks themselves, what we can see as an example of a normal correlation, the dynamic between the NASDAQ 100 futures and the 10-year treasury yields, you can see that the present value of tech stocks has an inverse correlation to yields. It's exactly what you would expect to see. As yields go up, risk assets go down. As yields go down, risk assets go up. This inverse correlation, the opposite reaction, ends up being what you would expect between risk assets and yields. But if we go and we look, well, he clearly calls out his perspective, and almost all other Bitcoin bulls was that low rates and monetary stimulus were extremely bullish for Bitcoin. Now, we must confront the idea that higher nominal rates are positive. With ongoing tapering and liftoff expected in 2022, is this bullish? And he says more than anything else, this might be proof positive that Bitcoin is working as a hedge against inflation. If inflation continues to surge in 2022, anticipated actions by the Fed to speed up the taper and liftoff process will likely cause rates to move higher and faster. And then he goes on to say that the net present value formula teaches us that all else being equal, you have that inverse relationship. Yields go up, asset prices go down. However, big however, based on the correlation between Bitcoin and treasury yields, it appears that we might see yields go up, Bitcoin go up. Yields go up, Bitcoin go up. That would be breaking from the legacy consensus. And so ultimately, when I saw this, what I started to think to myself was, why would this be true? And what I have concluded is that in an environment where rates or yields are going up, people are actually being incentivized to go back out of the risk assets, go back to value investments, go back to conservative assets like the dollar or these bonds. And so ultimately, if Bitcoin is actually the reserve currency of this new digital financial system, then Bitcoin would be acting similar to the dollar or to one of these types of bonds. And so in some crazy way, although the legacy finance folks look at Bitcoin as a risk-on asset, they believe that it is similar to a technology stock. It is part of the most asymmetric part of their portfolio. In the crypto industry, where a majority of young people hold a very material part of their net worth, they think of this as their financial system. Bitcoin is actually the flight to safety. It's the most conservative asset. It's the thing that if you're going to go back into safety, Bitcoin can be one of those solutions. Now, it's not the only one. There's things like stablecoins and others, but it is very, very interesting. And it breaks the narrative that risk assets would go down if yields go up. Because right now, when yield goes up, Bitcoin goes up. And so if the Fed was to actually go ahead and increase interest rates in 2022, they've signaled that there would be 3 potential interest rate increases. If that was to happen and Bitcoin went up, I think it would leave a lot of people scratching their head. I don't know what's going to happen. I don't think anyone knows what's going to happen. But I do think that it's important to visit these types of analysis because it is exactly opposite of what the mainstream consensus view is. So time will tell when yields go up and the Fed decides to act. Will Bitcoin go up or will it go down? And I think that right now, the most important number in all of finance is what is that interest rate environment? Are they going to raise the rates or are they not? Time's going to tell what Bitcoin's reaction will be as well.